Jason Bond from the Bull Microcap Fund. Value investor Brian Jakubowski said, price and value diverge because people are emotional. That's why the distinguishing attribute among successful investors is temperament rather than brain power, experience, or classroom training. They have the ability to be rational when others are not. Or, as Warren Buffett said, success in investing doesn't correlate with IQ once you're above the level of 125. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing. Finally, Ben Graham, Warren Buffett's teacher and mentor, and the father of value investing, said, "You're neither right nor wrong because the crowd disagrees with you. You're right because your data and reasoning are right." U.S. President-elect Donald Trump has promised 25% tariffs on all goods from Canada and Mexico unless these countries control the flow of illegal drugs, especially fentanyl, and illegal immigrants. How would these tariffs against Canada impact the ADF Group, which I've profiled before and which gets 90 to 95% of its revenue from the United States? Let's quickly review the investment thesis for the ADF Group. The ADF Group designs and engineers complex steel structures including airports, stadiums, office towers, manufacturing plants, warehouse facilities, and transportation infrastructure. Here are the metrics of cheapness. Enterprise value to EBITDA is 3.11, price to earnings ratio is 5.59, price to book is 1.87, price to cash flow is 2.26, price to sales is 0.84. The market cap is $197.5 million, while enterprise value is $176.9 million. Cash is $76 million, while debt is $47.2 million. The Piotrowski F-score is 8, which is very good. Insider ownership is 46%, which is outstanding. Return on equity, ROE, is 37.1%, which is excellent. And intrinsic value scenarios are as follows. Low case. If there's a bear market or a recession, the stock could decline, of course. That would be a buying opportunity. Mid case, the current PE is 5.59, but it should be at least 16. That means fair value for the stock is at least $16.43, which is over 150% higher than today's $6.54. High case, assuming a 10x enterprise value to EBITDA for fiscal year 2025, the stock would be worth $22.69, which is over 245% higher than today's $6.54. So how would Trump's tariffs impact ADF Group, which gets 90 to 95% of its revenue from the United States? First, ADF Group has two facilities, a 635,000 square foot plant in Quebec and a 100,000 square foot plant in Montana. The company could shift some of its production from Quebec to Montana. Second, if the Canadian government controls, or promises to control, the flow of illegal drugs, especially fentanyl, and illegal immigrants into the United States, then Trump would likely remove the tariff. Third, ADF Group stock is incredibly cheap. The PE is 5.59, and even if 25% of their earnings went away, the PE would still be only 7.45, which is very low. Also, in less than 2 years, the equity value of ADF stock, or the book value, will be more than the market cap of the company. The bottom line is that even if Trump's 25% tariff against Canada were to be implemented for a year or two, ADF Group stock is still incredibly cheap, and the company would shift some of its production to its Montana plant. In the meantime, the Canadian government would be working to control the flow of illegal drugs and illegal immigrants into the United States, potentially causing Trump to remove the tariff. Going back to Ben Graham's quote, "You're neither right nor wrong because the crowd disagrees with you. You're right because your data and reasoning are right." The data and reasoning show that ADF Group stock is incredibly cheap, even assuming Trump implements the tariff against Canada. What an investor needs to invest in the ADF Group is a rational temperament, not necessarily a high IQ.